Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing well. I think we got the gang all here. So shout out to our folks in the Simpler Essentials room. And of course, our Simpler YouTube and the Facebooks and the Twitter. Great to see you all, folks on my YouTube and Twitter as well. Happy Thursday. Good to see you. And again, thank you so much to everyone who took time out in their day or the evening, I should say, to join me for yesterday's webinar. I hope a lot of those ideas, I really do think a lot of those ideas are things you can put to work this very morning. Relative outperformance, starting with the overall structure of whether it's a 5-minute, 1 hour, or daily time frame. Of course, we'll take some questions here, so we can definitely keep that conversation going. Put some of those tactics to work. I know a lot of you this morning are freshly DPMR and HPMR'd up. So for those of you that may not know, part of the Simpler package, the Sector Secrets Mastery, and you'll see it on the Simpler Trading homepage. So my folks there on social, if you head on over to simplertrading.com, you'll see that splash on the homepage, our Sector Secrets Mastery trial package. And it is a heck of a package. And probably the two things I'm most excited about are the access that you all will have to the PMRs, both the HPMRs and the DPMRs, as well as the multi-trend. So super stoked about that. Let's get to what's going on this morning. And the question I'm getting a lot of is, Rag, is this the beginning of a much more significant move to the downside? And what we want to remember is always context, right? Always context. So first of all, we have for sure 2 days, today and tomorrow, the biggest 2 weeks of this week, and possibly the biggest 2 weeks of August. Not to over exaggerate, but what we have is it's a small company. They sell fruit, and another company that does river tours. So if you haven't heard about them, they're really important to tech. Apple and Amazon have earnings after the bell today. So we've got that, as well as then tomorrow, non-farm payroll. And if markets seem like they don't know what's coming up next, that's okay. We had a massive July. And if you checked out the free video that I did on Tuesday, I did a deep dive into the historical seasonal nature of August. And it's choppy, right? For the last 5 to 10 years, it's been very choppy. It's been choppy, but slightly bullish. And gosh, isn't that sort of how August is already feeling? Choppy, but bullish. It might eke higher over the next, 3 weeks, but it will do so in a really ugly way. So one of the things we've been doing and will continue to do is shorten the time horizon, shorten the time frame. Because if I don't trust that a trend is going to follow through, why on earth would I have built into my risk reward, built into my trading plan, an overly ambitious T1? That is going to kill us this month. So small adjustments like that are going to make a huge, huge difference. All right. So what do we have here today? I think probably the most important thing about the S&P right now is it's definitely choppy and it's still bullish. The most important thing to note about the NASDAQ, choppy, but this is the first blue grab candle we've seen. So what does that mean? The blue grab candle means we're starting to see a tiny bit of neutral market opinion going into the NAS. By the way, my sector secrets folks, what have we known about the NAS, the Dow, the Russell, and the S&P? The NAS has led the charge since April. It's entitled to a little bit of a breather, and August might be that month. If you recall from the kind of trades we took in the mastery, what did we do? We focused on JP Morgan. Financials have been on a tear. We started focusing on healthcare, right? Healthcare, specifically Johnson & Johnson, was on a big move to the upside. So what we're doing is asking ourselves, do we need to trade consumer discretionary, technology, and communications? Apple, Microsoft, Meta, Google, Amazon, Tesla, NVIDIA? We don't have to. We'll keep an eye on them. But let's make sure that we're constantly keeping in mind. There are other sectors on the move. One of them I talked about last night in the webinar, which was, hey, let's keep an eye on things like Freeport-McMoRan and the metals and mining part of the market. If we don't want as much exposure, right, to Amazon and Apple sort of earnings reverberations, right? Is our metals going to care if Apple iPhones or if Amazon Prime Day disappointed or not? Not as much. So if you're thinking, where can I kind of look for opportunity where I'm not exposed as much to non-farm, to Apple, to Amazon? And that's where understanding the different sector strengths and the different outperformance is going to absolutely be a needle mover, right? So I hope that makes sense. And I hope that's something that everyone can think about and not feel like, frankly, you've got to trade your favorite symbol, right? I like Tesla. A lot of folks do, but that doesn't mean it's at the top of my list every day. Does it earn my attention and therefore my capital, right? Freeport-McMoRan may not be something we think a lot about, absolutely on our radar. JP Morgan, things like that. So all I'm saying is open up to different sectors, look at relative performance, and that's where we'll find where the follow through could be. Because gang, yeah, we need fills, but we get paid on follow through, right? Okay, so let's go ahead and jump into the questions. Hey there, Ann, I appreciate that. Thank you. I enjoyed doing that webinar. I mean, the way that Trish put those slides together, it really felt like, hey, let's do a session about trading. And oh yeah, we've got an amazing trial package, but let's talk about the charts. Let's talk about scalability. Let's talk about points per contract and risk, right? So I really love doing that. It kind of felt like a really great hour where we could just talk trading. And if you haven't checked out the replay, I think you can catch it at simplertrading.com/opportunity. And if you just want to jump into the trial with us, it's simplertrading.com/outlook. All right. Opportunity and outlook. Love that. Love that. Thank you, Ann. I appreciate it. All right. So next up, let's grab some questions, shall we? All right, John, first up, love it. Where would I place my stop on daily Morgan? Oh, we talked a lot about risk, didn't we? Right? We talked a lot about, in fact, what was my favorite chart yesterday? The loss, right? Why the loss? Because if you're a good loser, right? If you're a good loser, that is the path. That's the gate that swings wide open. Oh, you're a good loser? John, you're a good loser, David, and everyone else here in the room, Mark, let me open the path to successful trading to you, right? That's the funny thing about it. And I've always felt that, look, if you don't lose a lot, which frankly I don't mind talking about losers. They're very good lessons, right? So I think folks in the mastery know, oh my gosh, we've got a loss. Raghee's going to spend the next 15 minutes talking about position sizing and stop losses. So I love the question, John. Morgan Stanley, is it a relative outperformer within financials? That's the first question. But let's get past that because your specific question was, where would I place the stop? So in this case, I do want to be a buyer. No question about that. And the second part is, where would I want to be a buyer? And that is, so you see where we are right now? We're just above. If we can place a minor low, that is and I'm going to be kind of funny here, it's a super secret pattern for the Sector Secrets Mastery. I joke because this is a pattern that I learned about back in 1988, right? It's an old school pattern. It's a price pattern. It's not based on shapes of candles. It's based on open, high, low, close. If we can put a minor low there, the place where I would put the stop would be below the minor low. Now you're asking about, say, using the 34 EMA wave. All right, let's look at it from another perspective. So let's pull up Morgan here. So I'm going to go from the TradingView charts over to the Thinkorswim charts. All right, and this is my tops layout. And a lot of the tools on these screens, gang, you all have access to during the trial. So what do we have here? Grab and wave, both of which you get access to. This, gang, look, if DPMRs and HPMRs weren't worth the $7 trial alone, getting the multi-trend, which is going to be yours to keep, John, that's why the wave would be valid. but I still would probably, if you're not going to use the minor low, I would say put it below 88, right? Because you've, like, just like you said, you've got the propulsion there. You've got that fast EMA of the 8 crossing with the slower EMA of the 200, putting a nice floor in there in an uptrend. Yeah, that's the way I would look at that. In fact, let's also think about, you could scale in between the 21 at 90, the 21 propulsion, and the 200 propulsion at 88. So you've got a 2-point range to scale into. Good stuff. Thanks for the question, John. Next up, David asked, we take a look at Tesla, of course. So when we think about Tesla, gang, let's go back to what we talked about in the webinar last night, and that was index sector stock, right? Now, the weighting of a stock and the impact of a stock on a sector and on an index is not equal. And I'm just having I need a haircut. I'm having a tough hair day today. I am. These are real trader problems, Can't think with hair in your face. All right. I know my hair and makeup squad is just off, forever. Okay. So we take a look at Tesla. This is an interesting look at the multi-trend. My folks who are in the $7 trial, please make sure you got that multi-trend sequence. Step number 1. Is it neutral or is it bullish? Yellow means neutral. So in this case, is this a buy the dip? David, it is technically not. So I'm going to shift strategies. I'm going to shift indicators. And what I'll do here, David, I'll use our sector slow stow. And sector slow stow is just the slow stow settings I use for the sector secrets mastery. I'm going to use that yellow neutral to remind myself I've got a bullish but choppy environment, and I'm going to look for an oversold buy. You got it. I mean, I love it, David. So maybe use the Darvis and a minor low, because I think a minor low would be a great, so I won't call it a dip, right? I always like to get a cool t-shirt for the different expos and money shows. I've got a keep calm and buy the dip t-shirt that I'll be rocking in October. So that's what I'm going to do. I'm going to keep calm, but I'm going to look for an oversold buy. Definitely not a dip in this situation, David. Keep an eye on a minor low and that Darvis. Okay. As far as the value woman, hey, thank you for asking. I'm pretty sure, although I'm not entirely sure. Let me make sure I'm correct on this. You go to simplertrading.com/opportunity. Because usually we put the replay there. Oh, there you go. There you go. So value woman, yes, if you head on over to simplertrading.com/opportunity, right there, you can watch the replay. And by the way, the replay is on YouTube as well. So all of you on YouTube, I had a lot of folks on YouTube yesterday. Thank you. Thank you for coming. If you go to Simpler Trading's YouTube, the replay is available there as well. And then when you're ready to join me, and gang, please don't dilly-dally. Look, if this is not for you, I totally get it. But if for 1 month you could sit in a community that's active between 9:30 and 4, and you get tech support from Lorna Bot, you get trading ideas and trading support and Q&A with me. Look, that 1 month alone should be a huge needle mover. Okay. And that's, I was thinking about this last night when Trish Boss and I were wrapping up here in the office. And after my father passed, there was a newspaper. It's the Sun Sentinel down where I live. And in the newspaper, there was a guy who would write about finances. My mom was 40 years old when my father passed, and she was a mom. So she said, I've got to figure out, and I think some of you know, because I've got to figure out how to make money in the market because I want to be home for my kids. And I remember this, I was 15 years old. But the thing I remember so much, there was a guy, his name was, and it's so funny, I was 15 years old, I'll be 52 today. And I remember his name like he's a member of the family, Humberto Cruz. Humberto Cruz would write about finances. And he opened my mom's eyes to, I can invest and I can market time and even sort of long-term trade, and I can grow my capital. And I thought, we've never met this guy. And yet he impacted our lives in such a major way because he made the markets accessible. And even at that age, I said, one day, that's the kind of thing I want to do for people, right? Humberto Cruz. I don't know where you are, Mr. Cruz, but that's the kind of impact once you understand how to treat the market, short-term or long-term. I remember what an important thing it was, for us and my family. So the trial is kind of my my effort to go, gosh, if only for 1 month, can I do that? And I really feel I feel really strongly about that. I think most of you know, um, the markets are something that are unique. They're just a unique thing. And it's not as if you have to stop everything else you do in life to be able to be a trader or even a longer term trader or short-term investor. I don't care what you call yourself. Can you extract profits from the market and manage risk? Yeah. It's so, those are things that are really important to me. And anyways, thanks for humoring me. Uh, I do appreciate it. What about bonds? Dean says, ZB, my goodness. ZB is a great reminder that we do not front run our setups, right? So, Dean, in the mastery, in the top tier Outlook newsletter, I said, let's keep an eye on the 123 handle. Let's put it on the radar, but let's wait for the setup. We do not front run our setups. We do not presume that a level is going to hold until the signs are there that it will. And look what's happened. Yep, it's absolutely continued to sink. It did not give us a minor low. It did not bounce like it did back in on July 10 last month, and it's going to continue lower until we get a setup. So, do I like a potential setup in bonds? Yep, I do, but not until we get the full sequence, not just hitting a daily price movement range, right? Not just getting an oversold stochastic. Now, this is potentially a short the rip, gang, and that's how powerful the multi-trend is. It's gone from a yellow neutral where bounces like in July worked to now, take a look. This is the second day of the red lower row of the multi-trend. This changes our entire strategy. And that's how important it is to start with structure, because structure dictates strategy. So yeah, Dean, a really good reason why we don't front run our setups. All right. So let's see. Next up is bear with me, gang. Is it possible to make DPMRs work with other symbols, other tickers? Charlie, we have a list, but what do we have? About 100 symbols with the daily price movement range. We are always adding slash changing up a little bit of the DPMRs based on really two things, Charlie. One, I think we have 108 futures, ETFs, and stocks. Number one, it's got to be liquid at the option level, right? We're not trading necessarily shares alone. So if I have a stock that I'm interested in or an ETF that I'm interested in, it usually has to either be important in terms of index sector stock, or it has to have liquidity. We will add stocks as needed, but those are some of the criteria. So there's a lot of symbols there and a lot of very popular ones as well. But if we get enough requests where there's a symbol in play and there's liquidity and it's been behaving in a historically volatile, so we look at historical volatility, if it's valid with that, yeah, absolutely. We're always fine tuning that list. We're always updating it. So that's a dynamic indicator where about every 3 weeks we re-examine what the list is, add, sometimes remove, and update the volatility level. So it's very actively managed, that particular indicator. So as needed or as requested, we do look at it. Yeah, absolutely. Okay. So next up is, what's the difference in how you use Darvis levels versus DPMR? They both seem like support and resistance. Yeah, Dark. Absolutely. Everything in the market is support and resistance, right? Volume ledges, volume profile, stochastic, everything. You're right. At the end of the day, the reason we put anything on our chart is because it should reveal buying support, demand, or selling resistance, right? Supply. And in the case of Darvis, it's how they're calculated, right? So Darvis is a price-based indicator. It's price that creates those zones. Daily price movement ranges, and as you asked, the hourly price movement ranges are based on time and volatility. So what is it that's printing that support and resistance on the chart? What's the difference? It's what we're using to say, oh, this is why we're going to generate that information. So Darvis is price, very valuable, but then we add a volatility tool like DPMR or HPMR, which, by the way, gang, the vast majority of market participants don't have access to this because, well, I created it. Yeah. So most people don't realize that based on the time of day or the day of the week, there is a different expectation for volatility. And we look at a historical 6-month look back to do it. So as always, gang, thank you so much for all the questions. Thank you so much for being at the webinar yesterday. And you can catch the replay over at simplertrading.com/opportunity. The trial package is available to sign up until August 7th. Please don't dilly-dally because on the 8th, it's over, okay? We're going to go into that 1 month. I'm going to walk you all through what we do in the room, and it's going to be a great month. So the webinar replay is available, and so that's a replay now, and I will see you all on the inside. All right, gang, have a great one. My futures folks, my mastery folks, I'll see you in just a moment.